Right, so before I actually hammer into the property market, it's a good time to actually remember that actually real estate has been one of the best investments over the last 50 years. A lot of people want to know what's going to happen to the property market, so I've pulled together some of my thoughts on both commercial and residential property market. So here are some of my thoughts. We are in a recession now, so any reasonable person should be able to figure out what's actually going to happen to property prices. Economic slowdown was actually long overdue. However, unlike the recession in 2008, which was caused by a debt bubble and a financial crisis, which led to a drop in consumer sentiment and consumer demand, this recession has been forced on us by a government shutdown, which has automatically hit demand and consumer confidence. No one can accurately predict the impact of the coronavirus on the global economy or the Irish economy or even human habits, as there's no economic model that can be used, as we've never had a world event like this. There is no point comparing the coronavirus with the Spanish flu in 1819 from an economic point of view. There's great merit in comparing them from a contagion point of view, but not an economical point of view, because we now live in a far more open economy. Economies and countries depend on global trade and also the movement of people. Ireland is actually one of the most open economies in the world, therefore we're going to feel this pretty hard. I've actually heard some prominent advisors advise that no one can tell you what's going to happen to property prices, and if they do, they either don't know what they're talking about or they're lying. In my mind, this is a little bit of a cop-out. They may be right in some way, however, some predictions can be made on the information we have to date. Some advisors are actually saying now is a great time to buy. And they may be right, but I do feel we're only at the edge of the cliff right now. Some major commercial advisors in Dublin, following a strong Q1 in 2020, are predicting a slow Q2, no shit, and a strong bounce back in Q3 and Q4. I'm really struggling to understand these predictions. If these predictions are a bounce back from Q2 2020, transaction levels, well, it's not that hard to bounce back from zero. But if these predictions relate to transactions levels in 2019, I'm not quite sure where they're pulling these predictions from. And I really feel that they're only self-serving. Effectively, Q3 is July, August and September. Many countries around the world may still be in some form of lockdown. Q4 is October, November and December. At this stage, I feel most companies will just be trying to deal with the fallout from the coronavirus and will only be starting to strategize on what they're going to plan for the future. In my mind, they will not be looking to take on more leasehold space, and they will not be looking to take on more space. In my mind, what they'll be looking to do is actually re-gear existing leases. Commercial property will take a big hit over the next year. Why can I predict this? At a local level here in Ireland, businesses will have to make a lot of changes over the next year until a vaccine is found. Offices will have to limit the number of staff that they have in at any one time. Restaurants will have to reduce seating numbers, and retailers will have to compete with more competitive online offers, as well as redesigning stores to allow for internal queuing. Because once other retailers are allowed open, they will not be able to facilitate queues outside their stores in front of other retail units, and therefore they'll have to give up valuable retail space to allow for queuing. All of these things will impact commercial tenants' ability to pay their rent in the future. Rental arrears are already mounting. It's been reported that 80% of commercial tenants didn't pay their Q2 rent, which was due on the 1st of April. I'm not actually sure if it's true, but it's not hard to believe when you see headlines like this. Some major companies are not paying their rent, and I'm sure that's the case across the UK as well as parts of America and elsewhere. I've said it before and I'll say it again, tenants are the lifeblood of any investment property. Landlords are going to have to work with tenants, and lenders are going to have to work with landlords. Otherwise, this will last a lot longer and losses will be greater if we start getting receivers involved again. As I've said before, Ireland is a very open economy. I've also stated in other videos that the impact of the coronavirus on Ireland and Ireland's economy will largely depend on what other countries do, such as America, UK and Europe, and how they tackle the spread of the coronavirus and what financial packages they put in place. I think most Irish people will agree that Trump is doing a miserable job of tackling the coronavirus, and this will have severe impacts on the global economy. There are some reports suggesting that unemployment could hit as high as 30% in the US. This will have a massive impact on consumer confidence and consumer spending. As it is an election year, Trump will try his best to reduce the number that are unemployed. I guarantee you he will put schemes in place where any US company that gets funding or tax breaks from the government will be forced to employ people directly in the United States before they employ anyone from any other country, or employ people in other countries as well. I think this is going to have an impact for some American companies when they want to expand and grow here in Ireland. The UK are heading into Brexit, and they were banking on agreeing trade deals with the rest of the world to help them out. However, I can't see that there's going to be many trade deals negotiated, and even if they are, trade is going to be so limited over the next year or two. This is going to have a massive impact on the UK economy, and they're going to be hit twice. They're going to be hit by a bad Brexit, and they're also going to be hit by the coronavirus. This is actually going to have a bad knock-on effect to Ireland as well. McKinsey and Company have come out this week and stated that 1 in 4 jobs in Europe are at risk of reduced hours or redundancy. 1 in 4 is 25% of the entire workforce in Europe. That's a huge number to think are at risk at the moment. The IMF, remember them? They came in and ran our country for a few years, and they didn't do too bad of a job of it. They got some stuff done. But they've come out and stated that the global economy will shrink by 3%, and advanced economies will shrink by 6.1%. That is a huge fall. That's more than twice the fall in 2008. Taking all of this into account, I'm fairly confident in saying that commercial values will fall and occupancy requirements will drop for the next year. How far values fall is the unknown. However, some sectors may drop by as much as 20%, other sectors may drop even further and beyond 2013 valuations. Other sectors will fall even further depending on their location, and all of this will happen within the next year. So how will this all impact the residential sector? Davies have predicted a 15 to 20% reduction in price. In my view, the level of reduction will depend on location as well as if the property would have attracted investors. I have already seen 10% price reductions being agreed on residential investment properties. And this is understandable given the fact that rental values have fallen so dramatically within the city. There are a number of reasons why rental values have fallen so dramatically within the city. A lot of international workers and students have returned home. Corporate lettings and Airbnb lettings have dried up completely, leading to a 71% increase in available properties on the Dublin letting market compared to this time last year, according to that. Some institutional landlords such as IRES and Kennedy Wilson have actually offered apartments for free. This is great for healthcare workers, but realistically what they're doing is making sure that they're not setting their rents too low and getting stuck in the 4% rental cap. Some smaller landlords may actually be thinking about this too, and they don't want to reduce their rents too low and get stuck in the 4% rental cap as well. But once they do actually reduce their rents and accept new leases, this will have an automatic impact on the value of their property. New investors will actually also have to allow for lower rents within the city, and they'll have to build them into their bids as well. It is likely that the biggest reductions in price is for residential property will be around the pre-63 investment properties. They're probably going to take a really big hammering over the next 9 to 10 months. In terms of the actual owner-occupier market, banks have already instructed valuers to reduce their valuations by 10%. This is actually going to probably have an impact on the purchasing power of buyers. Banks will also be very careful on reviewing employment status, and any changes will have an impact on the ability to borrow. Unemployment will likely hit a record high by the end of the year, if not sooner. This will impact consumer confidence and will weaken demand. It is estimated that nearly 1 million Irish people are now receiving support from the government in one way or the other. If this continues long term, the government are going to have to increase income tax on the people who actually are still working. In the short term, demand will weaken. The levels of supply will actually also drop as the market adopts a wait and see approach. While there is very little evidence at the moment because the market is effectively at a standstill, it's safe to assume that prices have already dropped 10%. We will likely actually only see the true reduction in prices in Q4 of this year when normal market activity resumes with viewings, etc. It would be my view that residential values will fall as a whole by 20% by the end of Q1 2021, and some areas may actually fall even further. New homes will take a hit too, but the first time buyers grant will actually lessen the impact for homes that are valued under 500,000, mainly because supply will be limited and demand in some areas will still be high, but they will still take a hit and there will be a reduction in value by the end of the year. New homes over 500,000 will probably take a far bigger hit, and they'll probably see somewhere in around 20% reduction over the next year. Residential development sites could fall as much as 50% over the next year, and I'll quickly show you how that actually would happen. Right, so I'm quickly going to explain here how development land or residential development land could fall by 50% over the next year. So this is actually just a quick site I looked at a few months ago. It was in Dublin. It was basically, we looked at it and felt that we'd get 9 units on it, 9 houses, 9 3 beds on it, and we put in the 3 beds. They were all slightly different sizes and slightly different layouts, but we put prices on them. You can see here, we put a range of prices on them, and we came to a total value of, a gross total value of 5.3 million once we'd sold all those prices. But when you sell residential homes, you have to take away your VAT and your sales costs and stuff like that. So basically net value was 4.7 million. But to get to your site value, or if you're doing a development appraisal, you need to take away all your build costs, you'll need to take away your planning fees and your consultancy fees, as well as any levies that might be on the site from planning, as well as kind of finance costs and so on. So once you've done all that and you've taken everything away and you've taken away your acquisition costs, we were left with a site value that we felt was around 1.35 million. We didn't end up going for this site because they were looking for 1.5, and we decided that that was too pricey at the time, so we stepped away and didn't look at it any further. So this was the first initial one. We didn't do it. We didn't go into any more detail than this, and we decided to walk away. But what happens if I was to reduce these prices here by 20% and see what that would impact on the actual end value of the site? So basically, I've quickly done that here. I've taken 20% off the actual prices to see what we might sell them in a year's time. So bearing in mind the current economic climate we're in. So taking 20% off those prices, say everything else remains the same. What happens is the overall gross value at the end of the development was 4.2 million. After you take away your cost or your sales costs as well as your VAT, you're left with 3.8 million. Everything else remains the same. Site costs, bill costs, everything remains the same. Finance costs will obviously are all the same as well, except for your site costs and actually the site itself. But what actually that all works out at, once you have taken everything away, you're left with a site value that you'd buy today for 720,000. So that's a big difference between the 3.25 million. It's actually nearly 50%, over 50% reduction in price, all because we have reduced these by 20%. Has actually resulted in a fall of site value by 50%. So that's what could happen to site values, residential site values in Dublin and in Ireland right now, if the property prices actually fall by 20%. Something to think about. It's not all doom and gloom though. In the 2008 recession, governments were not able to really borrow money, and if they were borrowing money, they're borrowing at a very high interest rate. So much so here in Ireland that the IMF were called in because we were no longer able to borrow. But at the moment, debt levels aren't too bad and interest rates are an all-time low. and cash will be available for governments to borrow so they can stimulate the economy again once we're over the virus. Bodies like the IMF are predicting growth in 2021. In the US, Trump will borrow a huge amount to get the US economy going. Europe will hopefully follow suit and do the same, and hopefully some agreement can be agreed on that. Ireland will need to borrow and will need to support businesses and homes to make sure this recession is only 1 or 2 years, because if they don't, this recession could be 4 or 5 years or longer. So just to finish off, real estate is generally a very good investment long term, but you need to be careful to make sure you select the right investment property or you select the right home, because if you select the right property, you won't lose money in the long term. I'm actually going to be trying to secure some deals later in the year, and if you're thinking about the same thing as well, it's good time now to get all your ducks in a row, because remember, buying property actually can take a considerable length of time, so it's a good time to start thinking about it now. If you found this video helpful, give it a thumbs up and a like there. Also, put your own predictions in the comments below, and don't forget to subscribe. Keep safe, invest wisely, and thanks for watching.